How are indices helping investors track the continued evolution of Asian bond markets? Hello, I'm Carmen Lok. Joining us today are Ken Sheng-ing from State Street Global Advisors and Randolph Tensher from S&P Dow Jones Indices to discuss the recent developments in Asian bond markets and how indexing is evolving to help market participants track the potential opportunity set across the currency. Ken Sheng, Randolph, thank you for joining us today. Ken Sheng, how has monetary policy tightening impacted the performance of local currency Asian bonds?
In general, with the monetary policy tightening, we have seen the Asian bond markets weaken. That is in line with the expectations as the central banks raise interest rates. At the same time, we have also witnessed inflation has picked up in most of the Asian economies. However, since the Asian central banks raising rates, we have started to see signs of economic weakness. At the same time, inflation has begun to subdue. So therefore, we expect that the fixed income markets in Asia over time will start to be more stable. And we have also seen investors' inflows beginning to come into this part of the Asian market. So therefore, we find that the Asian fixed income market over the period of the next few months will be able to find some stability within that. I would say that in terms of the performance of Asian local currency bonds, it has in fact outperformed that of its developed market peers. And that's mainly because the inflation trajectory in Asia are well below that of the global markets. At the same time, we have also seen the domestic investors have been the main anchor supporting the local markets here.
Thank you, Ken Sheng. And Randolph, what is the role of the iBoxx Asian Bond Fund ABF Pan Asia Index in Asian bond markets, and what is it designed to track?
The iBoxx ABF indices were created back in 2005 to serve as the official benchmarks for the Asian Bond Fund initiative of the EMEA group of central banks. They've been designed to track the performance of local currency government and quasi-sovereign debt across 8 markets in Asia. One of the key strategic goals of the indices has also always been to support the creation of index tracking products as a way of accessing the market and the individual subcomponents effectively and efficiently.
Thank you, Randolph. And Ken Sheng, many of the Asia ex-Japan exposures are currently from emerging markets. How do you differentiate between local currency emerging markets debt and local currency Asian bonds?
The Asian local currency bond markets, in fact, as you pointed out, is part of the global emerging markets, but there are certain features of Asian fixed income markets that are different from the global emerging markets. One of it being the fundamentals of Asia's are relatively more stable. We do not have large shocks in economic cycle, large spikes in inflation, and so on. So therefore, that is one feature. The other part is the fiscal policy aspect of the Asian economies. The fiscal deficits in general are much milder, and the currency volatility is also lower. Now, as a result, we will find that the overall market volatility of Asian fixed income market is lower than that of the global emerging market in general. And also the credit ratings that in the Asian economies are also a lot more stable, and we have not seen much of a credit default or downgrades that we are seeing in other parts of the emerging market. So I would say that from that standpoint, the Asian fixed income markets would stand out from that of the emerging markets. It is also notable that the Asian emerging markets also form part of the global fixed income indices, and so therefore the Asian emerging markets, in fact, they kind of straddle between the global emerging market and the global developed markets in terms of risk spectrum perspective.
Thank you, Ken Sheng. And Randolph, how has the iBoxx ABF index methodology evolved to track the changes in the Asian bond markets since its launch in 2005?
Asian bond markets have shown significant change over the last 20 years. In fact, all of the 8 markets that are reflected in the iBoxx ABF indices have grown in size and depth. As a result of those changes, the index also needs to periodically change to reflect the underlying situation in those markets. There have been 2 significant changes in the index methodology. About 10 years ago, we did review the way we calculated the fundamental weights for each market and moved this to a more quantitative approach based on the better availability of data. And then more recently, last year, we changed the index rules to allow for broader representation of the quasi-sovereign segment within each of the 8 markets, again reflecting the growth in size but also in liquidity of those asset class within each of the 8 markets. At the same time, recognizing the growing importance of sustainability, we also slightly amended the index rules to provide more representation of green bonds in the indices.
Thank you, Randolph. Kenshan, what are some of the potential opportunities and risks in local currency exposure relative to a U.S. Treasury exposure or FX hedge global Treasury exposure in the current environment?
Yeah, in the current environment, we have seen the Asian local bond yields rising. That is also the influence of higher U.S. Treasury bond yields. At the same time, the dollar strength itself have caused the Asian currencies to depreciate versus the U.S. dollar. I think at this point in time, that offers a good entry point for investors that have missed out the buying of Asian fixed income at this juncture. Over the medium to long term, we find that these entry levels would be attractive because the Asian bond valuations are considered to be relatively cheap. And also on the FX side, it's also considered to be relatively cheap versus the US dollar. I think on the medium to longer term, investors should pay the attention to the fundamental factors for the diversification benefits of including Asian fixed income into the portfolios. And there are opportunities in markets like China, Korea, for instance, that you can be looking for opportunities to get in at this level when the bond yields are higher. And so I think therefore from the longer term perspective, investors should consider Asian fixed income as part of the core asset allocation.
Kenshan, thank you for laying that out for us. Randolph, how are indices helping inform market participants?
Indices are a treasure trove of information and data that can help investors better understand how markets and asset classes have been performing. They can show the risk and return characteristics of the asset class in itself, or also how these over time have correlated. And through that, they can help investors make more informed decisions on their asset allocation and how to make investment decisions. For instance, for the iBoxx ABF indices, we not only calculate an overall index, but also more than 200 sub-indices that track the performance of sectors within each market or maturity bands within each market and the combination thereof.
Kenshan, Randolph, thank you for your sharing today.
Carmen, thanks for that. Glad to share the views here with you.
Thank you, Carmen. Thank you for having us.
To find out more about how indexing works for Asian bond markets and to access S&P Dow Jones Indices' latest research and data across the region, please visit the link below.